watching BNN Bloomberg. I'm John Ehrlichman. Stocks off to a slow start on this Monday. Let's head to New York. As promised, check in with Kriti Gupta of Bloomberg News, who's been tracking the U.S. equities. And Kriti, something we haven't talked as much about today, and talking about everything with the airlines so far. New tensions between the United States and China based on what the president was talking about over the last 24 hours or so. Just give us a sense on what's happening, how that's impacting the markets this morning.
That's right. You're seeing sentiment really take a hit this morning. Stocks, of course, trading lower as the president comes out and says maybe we could see another round of tariffs again against China, really accusing the nation of hiding the severity of the coronavirus. So you're really seeing some tensions reignited there. Of course, that's spooking investors this morning. But remember, there is also this broader theme about the dispersion between an economic reopening and how far stocks have rallied. So you are seeing this kind of idea come back into the play as we start the month of May again. The S&P 500 index actually seeing shorts climb. Now we're seeing the most shorts in the index since October of 2015. So it's not just a sentiment, of course, the Trump administration playing into kind of the negative tone in markets this morning, but you're also seeing this broader kind of hesitation to jump back into the market.
Okay, and we haven't really shown our audience since trading began what's been happening with the U.S. airline stocks. We've been talking about these pretty hard-hit numbers for Air Canada, but just give us a recap of what Warren Buffett was saying over the weekend, basically getting out of his positions of all the big airline players.
That's right. The U.S. major airlines, the laggards of the index today. Warren Buffett coming out over the weekend and saying that he's pulling his stake out of the airline sector, predicting that flying won't return to levels we saw back in 2019 for about 3 years. Now, of course, we're seeing travel and tourism as a sector as a whole really take a hit, and the airlines just a part of that. You're seeing Warren Buffett just pulling his stake completely. Now, remember, these major U.S. carriers, of course, in addition to these demand hits, the stock values have lost about more than half of their value since the start of the year just on this coronavirus issue. You're seeing passenger traffic drop 95% globally. So you're really seeing airlines take a big hit. And like I said, a Warren Buffett, a big name out there, really pulling a stake, really showing kind of a lack of confidence in the sector as well. But remember, we are talking about travel and tourism as a whole. When we're talking about a timeline for that, Warren Buffett may say it's 3 years for the airlines, but more on the Carnival cruise line sectors, names like Carnival, putting out the timeline to the end of summer. You saw some headlines come out this morning that they are planning a phase in to start the operations on their cruise lines starting in August and then shutting down their cruise lines until then. So you are seeing kind of some mixed sentiment here in the travel and tourism sector, but of course the big hitters, the major airlines off those Warren Buffett comments.
And I mean, look, I'm like everybody else. I'm very curious on what sentiment is going to be like when it comes to flying, but maybe even more so on cruises, because it is really uncertain as to how people are going to feel about going out on these ships. So watch for more on that front, Kriti. I did want to just circle back. Here in Canada, we've been talking about how Cargo in Canada is restarting their High River plant in Alberta. You've been watching Tyson, which is obviously navigating a whole host of issues as well.
That's right. Tyson Foods reporting earnings this morning, 77 cents on its adjusted EPS. It's compared to $1.20 year over year. So you're seeing quite a big shift. Now, remember, Tyson Foods is actually been under some trouble recently, having some plant shutdowns, really kind of having to navigate how the virus, how these unprecedented disruptions affect their manufacturing, their plant shutdowns, and of course their supply chains. You're seeing them say that the plant shutdowns could continue for a few months now, in addition to, of course, that drop in the EPS numbers. They're also talking about oversupply pushing down prices. Remember, Tyson's company is about 40% of their sales is exposed to kind of this food pricing risk. So when you're seeing oversupply in these livestock prices, that's really going to take a hit to Tyson's bottom line. You also want to remember they are talking about lower levels of productivity. This isn't just an issue with Tyson Foods. You're also talking about this in kind of broader sectors as well. As we talk about the economy reopening, how many people can you really put on these factory floors? How many people can you really bring with total confidence? And when they are at their jobs, will they be at 100% productivity? Tyson really bringing those questions to the forefront this morning.
Kriti, thanks as always. Helpful breakdown of some of the stocks on the move in New York trading. That's Kriti Gupta joining us from New York. When we come back, a Canadian retailer that has been